Hello and welcome. You're tuned into Your Trades with me, Ankita Saxena, and with me is Ankur Mishra. In the next half an hour, we'll take you through how the markets shaped up today and what are the cues to watch out for tomorrow's trading session. But first up, let's take a look at the markets. Well, we gave up all the gains, Ankur. In fact, it is another day of correction that came in. In fact, we managed to slip below the 25,400 levels also as far as Nifty is concerned.
Yes, we did slip below 25,400, but the good thing is that the Nifty has settled above 25,400 as we speak, 25,405, and where it is coming from, Nifty Bank, you can see double century in the red territory today. And not only that, you see other sectors, be it auto, pharma. Actually, auto and pharma did manage to be in green. They were the saving laggards in the trade today. But mid caps and small caps also did a complete fight with the bears, just managing to be in green by the end of the trade. The day was better if you talk about an hour before the closing, where bulls was in complete control. But as the day progressed, we have seen that bears actually won that kind of a match, and finally Nifty still holding above 25,400. If you talk about stock specific movements, Motilal Oswal, Natco Pharma, Blue Star were the gainers in today's trade. And if you talk about in the losers, the list is long. Interglobe, PNB, RITES, Vedanta, City Union Bank, they were actually leading with the losing side today. But all in all, still Nifty managed to close above 25,400 mark, and that is the saving grace for today.
All right, moving on. Then let's get on board Nilesh Jain, Head Equity Derivatives and Technical Research, Centrum Broking, who's joining us now. Hi Nilesh, thank you so much for joining us on the technicals. Nilesh, first up, it was a day of correction yet again. We did see a bit of a breather come in yesterday, but yet again, despite positive global cues, we have managed to correct. Now, this is a correction that we have been penciling in, but Nifty also managed to slip below the 25,400 mark today. Tell us, what are the levels to watch out for, and what are the levels that you're keeping on mind that will ensure that perhaps an uptrend is intact? So, what are the levels to keep in mind going ahead now?
Very good afternoon to you. Absolutely. So today, in fact, for the fourth consecutive session, we have seen a bit of a consolidation that has extended further. And today being a weekly FN expiry for the Nifty, we did see some bit of unwinding of the position from 25,500 strike. And put writers, in fact, witnessed some bit of unwinding of the position from 25,500 put strike. Now, looking at the overall setup, we are expecting this consolidation to continue in the range of 25,200 to 25,600. So that's the broader 400-point trading range on immediate basis. And that is acting as a support and resistance level respectively, 25,200 on the lower side and 25,600 on the upside. So on the upside now, it is important for the Nifty to reclaim 25,500 mark going forward for bulls to regain the control, and we may see a follow-up move on the back of short covering as well, post breakout about 25,400. So that is much needed breakout that is awaited now. The VIX, India VIX volatility index, which is currently at 12.41, which is very much in the comfort zone. So that is not giving any sort of an indication that we may see any further major sell-off from here. So this consolidation with slightly negative bias may continue further. But if at all we see any decline towards 25,300, 25,200, that can be a good entry point as far as Nifty is concerned. Now coming to Bank Nifty, the structure for the Bank Nifty looks slightly weaker compared to the Nifty index, but it has multiple supports starting with 56,400 followed by 55,800. So these are important supports to watch out for. If at all we see any meaningful decline towards 56,400, I think that can be a good entry point in terms of fresh entry on the long side. So as of now, we are focusing on sectors and stocks. Sectors and stock specific action should be in focus. And on index fund, we are expecting sideways momentum to continue.
All right, that's the advice which is coming in from Nilesh. But coming to your picks, which are the stocks you will advise in this momentum? As you mentioned, the range between 25,200 to 600. Which are the stocks one should pencil in?
Right. So I have two buy recommendation. First of all, Bombay Stock Exchange in this counter in previous 6 consecutive session, we have seen range bound trade. The stock today has given a good breakout with a good volume participation from a falling trend line. So we are expecting from here a strong pullback towards the levels of 2940 to 3000, and a stop loss can be placed at 2750. So BSE is a buy. Apart from that, defensives are once again back into the action. We have already seen good momentum in pharma, IT. Now I think FMCG should witness some bit of a catch-up move. So within FMCG space, Dabur specifically, this particular stock is looking attractive at current level, given the kind of a breakout that we have seen today, with good volume participation, with a buy crossover on MACD as well. So Dabur looks strong on the chart for a follow-up move to continue towards 508 to 515 from a short-term perspective. Stop loss can be placed at 482.
All right, so the two picks coming in there, Nilesh, buy call coming in BSE and Dabur with the target price of 2,940, and for Dabur the price is 508. But thank you so much for joining us with your buy calls. Let's move on and let's go across to Shrishti, who's standing by on the charts to tell us what are the breakout or the breakdown counters. Shrishti, two breakout counters that you are standing by with. Tell us what are these counters.
Well, yes, the markets were on the weaker foot today, but we have spotted two counters on the breakout side because select pockets were showing momentum. First up, let's have a look at Voltas, because the consumer durable counters were actually doing very well, and Voltas, after that significant sell-off that we have already seen, the stock was seen to be consolidating in quite a tight range for some time now, and for some months rather. And today, in today's trading session, it was a 3 to 4% jump that we have seen. The stock was seen to be hitting its 2-month high for itself, and a bounce exactly from its 20-day moving average is what we have seen on the technical setup. So this is the first stock on the breakout side. We're moving on to the next one. Even the chemical basket was doing very well, and one of the leaders there is UPL. What was interesting to see is that the stock managed to claw back to its May high levels and was trying to retest those levels. Now in the upcoming days, that will be interesting to see how the stock manages to break above those levels. But for today, after that consolidation, we have seen a good move on UPL. And not just that, you will also notice the fact that for the past 5 consecutive days, the stock has already been on the uptrend, now retesting that May high levels for itself, and that will be interesting to see how the up move continues from here on. But for today, we have also spotted a long build up on the derivative side, and hence we have got the stock on the second breakout stock. So these are the two stocks for today. Back to you.
Thanks, Srishti, for bringing those two stocks. And moving on, let's hear a few words of wisdom from none other than A. Balasubramanian, Managing Director and CEO, Aditya Birla Sun Life AMC. He shares his top sectoral picks going forward. Let's listen to him.
Of course, is the capital goods sectors have gone through its own consolidations. Now the spending aggression that is coming in would lead to an increased order book positions, and energy sectors will continue to remain a sector to watch out for. That's why the portfolio manager is taking a bet. And the non-banking financial services gone through their own piece of consolidation. Therefore, cost of borrowing coming down. Therefore, they may lift actually the ownership among portfolio managers. And pharma sector is relatively stable. If tariff is not going to get impact the pharma as a sectors, I think the sectors will remain forever. And likewise, there are multiple sectors of this kind will anyway form part of the overall. Like telecom industry is again doing extremely well. I think most of us are having a large ownership in telecom as a sectors, and the service sectors, even in IT sectors, have gone through its own phase of consolidation, and they are paid whatever had to pay in terms of market price reactions. I think defense, you rightly put it. There are many companies that are trying their luck on the defense side. Yeah. Some of them established, some of them have got established track record, good order book positions, but executions will take another 3-4 years for you to reflect on the revenue as from the bottom line. But they have a huge capability. And there are large companies coming from public sectors. Liquidity may not be there for one to buy big time.
And well, as Q1 updates of new financial year start trickling in, my colleague Varun is standing by with the updates of a few banking names. Let's take a look.
Definitely. The quarterly updates for many of the banks and NBFCs have come out, and let me tell you stock-wise. First of all, let me speak about M&M Finance. If you look at the overall quarterly update, it has been on the weaker side, because if you look at the overall disbursement, they are just up by around 1% on a YOY basis to around 12,800 crores, and overall business assets have jumped out by around 15%. The collection efficiency has been 95%, but if you look at the stage 2 and stage 3 assets, a little bit of slip has been seen over there because it is expected to be in the range of 3.8 to 3.9% the stage 3 assets versus 3.7% in the month of March, and the stage 2 assets they are expected to be in the range of 5.8 to 5.9% versus 5.4% in the month of March. And basically if you look at M&M Finance, this is one of the number that is closely looked upon, and a little bit slip in stage 2 and stage 3 asset will be actually taken negatively by the street. Now let me speak about PNB. The overall updates are a little bit weak. If you look at the overall global business, that is up by around 11.6%. The deposit growth has been good. The domestic deposit growth has been 12.2%, global deposit 12.8%, but the global advances, it has been up by around 9.9%. That is, it is in the single digit, and actually if you look, they are at multi-quarters low. So this is going to be one of the pain points for PNB. Now for CSB Bank, the growth has been good. Total deposit is up by around 20%. CASA is up by around 14%, gross advances has shown a growth of around 32%, and also the advances against gold and gold jewelry is up by around 36%. So that's a good sign, although CSB has been growing at this pace, so that pace has been maintained. So other than CSB, also keep an eye on Muthoot and Manappuram because of this gold advances that the company has shown. For Indian Bank, the overall numbers looks good because the overall business has grown by around 10.2%, deposit is up by around 9.3%, and global advances is up by around 11.3%. In the previous quarter, the overall growth has slowed down, but in this quarter, it looks that the overall growth has again rebounded for Indian Bank. So for Indian Bank and CSB, the numbers look good. For PNB, global advances are weak, and for M&M Finance, the stage 2 and stage 3 assets, they have actually slipped, so that could be a reason of concern for M&M Finance.
All right, Varun, stay on with us because Macquarie has shared their stance on the whole financial space. Varun, take us through.
Well, so Macquarie has come out with an interesting note on financials, and they actually expect the margin issues in banks to be transient, and they expect banks to deliver a solid 15% EPS CAGR in the next 3 years. They say that as PSU banks are actually losing market share to deposits on deposit, and they expect the EPS to decline in FY26. For NBFCs, the NIMs are expected to expand, the growth to decline, and after a recent rally, they are conscious on the overall life insurance space, and they prefer the general insurance space more than the life insurance space, because in life insurance they expect the APE growth challenges to be there in the near future. They prefer private banks more than anything else. HDFC Bank and Axis Bank are their top pick. Other than this, Aditya Birla Capital, PFC and Shriram Finance are amongst their top pick. For 5 stocks, they have actually changed their overall ratings. They have downgraded Kotak Bank and SBI Cards from outperform to neutral, although they have raised the price target. For PB Fintech, now their stance is neutral from underperform. For HDFC Life, they have changed their stance from neutral to underperform and changed the price target. But the biggest downgrade that has come on IndusInd Bank. They have changed the stance from outperform to underperform now, and the price target has been cut from 1210 rupees to 650 rupees now. So keep an eye on all these 5 stocks, but especially IndusInd Bank, because there is a big downgrade coming from Macquarie.
Macquarie on financial names, and therefore all these counters were in focus. But the couple of other counters that were in focus today, let me get my colleague Rabinder on board to give us a sense of what were the stocks that were in focus today. Rabinder, take it away.
Well, Motilal Oswal is in focus, where companies say that the Motilal Oswal Asset Management company has crossed 1.5 lakh crore in AUM, and over the past 5 years, the company has delivered a robust 34% CAGR in AUM. So, back of this, Motilal Oswal is in focus. Moving to next, Biocon is also in focus, where companies say that the subsidiary company has received marketing authorization from European Union for Webzuo and Efrexi biosimilar of Denosumab. Apart from this, MOIL is also in focus, where MOIL has recorded its highest ever June production of 1.68 lakh tons of manganese ore, marking a 2% increase year-on-year basis. Moving to next, Uno Minda is also in focus, where companies say that the company has completed acquisition of IP rights and e-drip business asset in the Germany. And lastly, Alembic Pharma is also in focus, where Alembic Pharma has expanded US footprint with $12 million acquisition of utility therapeutics. So back of this, Alembic Pharma is also in focus.
All right, moving on, Tata Power has been ordered to pay $490 million in damages to Clearos Capital along with interest and legal costs. And this is after a partial award by an arbitral tribunal under the Singapore International Arbitration Center. Now, Kanishka is joining with more details. Who has actually gone through this order?
Well, Tata Power is in the spotlight today after a major setback in an international arbitration case with Clearos Capital Partners. Now, in the latest update, Tata Power has revealed that it has been ordered to pay 490 million in damages by an arbitral tribunal under SIAC rules, that is the Singapore International Arbitration Center. The tribunal also awarded 5.33% simple interest on damages from November 2020 until the date of payment and an additional $8.29 million in legal costs with interest from July 1st, 2025. Now, what's this dispute all about? Now, Clearos alleges that Tata Power breached confidentiality and non-circumvention clauses in NDAs related to a proposed coal mining project in Russia. Now, the fund had filed a claim seeking damages ranging from $5.25 billion to $20 billion. The arbitration was initiated back in November 2020 with oral hearings concluding in February 2024. Now, Tata Power received the award on July 1st, 2025, passed by a 2:1 majority of the tribunal. Now, following this latest SIAC award, Tata Power says that it is currently reviewing the award and is evaluating all legal options, including a possible challenge to the verdict.
All right, there is Tata Power in focus in the back of that. In fact, that traded down more than 1.5% on the back of that. But let's go across to my colleague Snehi, who's standing by with all the cues to watch out for before tomorrow's trading session. Let's get on board, Snehi. Snehi, take us through all the cues that we need to keep on our radar.
Well, yes, lots of cues to watch out for. Not much happening on the macroeconomic front back home. US markets are going to remain shut on the 4th of July Independence Day holiday. From Eurozone, you have PPI numbers trickling in, and from Japan, you have household spending data. So watch out for both of these macroeconomic indicators from Eurozone and Japan. But shifting focus back home once again, let's talk about some corporate action. And Concord, which is Container Corporation of India, that stock is going to be trading X bonus in the ratio 1:4. So watch out for that stock. And other than that, a whole host of stocks will be trading ex-dividend, the likes of Tech Mahindra, Axis Bank, Bharat Forge, Biocon, Petronet, Escorts. You have Nestle, Tech Mahindra, M&M. That list goes on and on, so watch out for all of these stocks as well that will be trading ex-dividend. In terms of annual general meetings, Tata Power will be in focus, and in terms of other events, you have President Donald Trump's target date for signing the Republican-backed tax and spending bill. Well, that bill has made it to the upper house, so let's see what the update is on that front. And ECB Governing Council member Francois Villeroy de Gallo is also going to be speaking, so watch out for important commentary from his speech, but well, yes, keep a close eye on all of these cues.
All right, moving on, the beginning of the month often marks key financial activities, salary credits, bill payments and planning expenses. But just as we plan our expenses, it's equally important to plan our investments. To encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh, Behtar Nivesh, Behtar Kal. The objective of this initiative is to promote a habit of consistent investing among Indians, helping them to secure their financial future. As part of the campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones.
All right, with that, it's time to wind down on this edition of Your Trades. We'll take your leave. Thank you so much for tuning in.